Mark, thanks for joining us. So first off, there's a lot going on politically around the world, both in the US, the UK and elsewhere. So it's hard for investors to gauge how these things might be affecting markets. What's your take on this?
Well, thank you. Just managing the Securities Trust of Scotland, allows us to be able to invest globally. And I think that's really important in today's investment markets, where there are quite a lot of pressures and risks, certainly from the likes of populist politics, but also from the likes of the central banks extricating themselves from a protracted period of central bank policy where we've had interest rates very, very low. It's very difficult, not just for investors, but also ourselves as fund managers in understanding what's going to happen day to day. But what we can do is really invest alongside the companies that we invest in to understand how they are driving growth over the long term. And that should lead to hopefully better returns to us as shareholders.
Now, Securities Trust of Scotland has introduced some progressive measures recently. Can you outline a few of those?
Sure. So when I arrived last year at Martin Currie, I spent quite a bit of time with the board, really looking at how we could progress the Securities Trust over the next 5 years, having actually been very successful. Alan Porter, who was managing the fund with me, now with me, he was using a benchmark, which was the MSCI High Yield Dividend Index, which is quite a small index, and we've actually taken that away now to give us the ability to invest much more globally in terms of smaller stocks as well, hopefully, which will allow us to generate better returns. We've also introduced the use of some structural gearing, which was much more short-term prior to my arrival, and we've also introduced the use of options to generate some income. So some progressive measures for Securities Trusts that we really think will be able to drive much stronger investment return in terms of capital, but also dividend return in the future.
And you've also introduced some refinements to the process too.
Yes, of course. So, obviously I bring to the table and to a new team some experience of running money slightly differently. And so we've been able to bring in some research processes, if you like. I like to call it a research system, because we're doing a number of different things to really increase the conviction of the stocks that we're investing in, at just not just the stock level, but of course at the portfolio level as well. So what are we doing? Well, we're spending a lot of time really collaborating. Learning is really important, but working very closely with the companies that we invest alongside, if you like, to really understand what their strategy is and how they might evolve that strategy over time from structural growth trends. But really importantly, we're also using stress testing or scenario testing to understand how companies will operate in a more difficult environment. And that allows us to build confidence that our companies can continue to invest and grow and produce strong cash flows in the future.
So tell us about some of those companies. Which stocks have you been investing in recently?
Sure. So as I mentioned, we start with growth. So we're really looking for growth, and that's somewhat different from other income funds out there that generally invest in quite mature companies that have high payout ratios, so they're paying out a lot of their earnings. We're looking for companies that are able to introduce cash flows back into the business to grow, which will lead to more sustainable cash flows in the future to us as dividend holders. And we look to do that by identifying long-term structural trends, growth trends such as the use of data, dietary change, for example, demographics in terms of the consequences of aging. And one of the companies we're looking at the moment is Civitas Social Housing, which is an IPO that launched just last week, which I think is really fascinating because it's a UK-based company, but it is filling the void where the UK government has actually stepped back from developing social housing. So I mentioned the structural trend of the consequences of ageing. Well, we've got a lack of social housing for those that are ageing, assisted care, for example. So this company is going to be buying developments of social housing. There's a massive demand for that, and we know that there are 4 million people waiting for social housing in the UK, with only about 2.75 million houses existing. So supply-demand dynamics that work nicely, and an income stream that Civitas will be able to generate from leasing those houses back to a housing authority, who in turn is getting the rents coming in through housing benefit effectively from the government. So really nice inflation-protected dividend stream there, which we can lock into over the long term. And from a smaller company, less research on that smaller company, so hopefully gives us a little bit of an edge there.
The results announced recently were positive. What's your outlook, Mark?
I think the outlook's very strong for the Securities Trust of Scotland. We've got lots of changes that we've made this year. Of course, now a team to bring to bear to really hopefully drive performance forward. Certainly the changes we've made through the use of some more of the toolkit in terms of the research processes that we're using, I think makes the stocks that we're bringing forward much more robust. We're getting very good dividend growth underlying coming through, and I'm hoping that we'll be able to deliver very strong capital performance as a result from some of the smaller companies that we're now targeting, and certainly from the structural growth trends that we're able to identify that our companies are generating their strong cash flow returns from.
Okay, Mark, thank you very much indeed.
Thank you.